What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today we are answering the question about whether or not there is a dollar shortage. Now, contrary to first impressions, this is actually not just a straightforward yes or no question that we can answer. So first, we have to dive in and we'll look at what is a dollar shortage in reality. Then once we have a good understanding of what a dollar shortage really is, we are going to address whether there is a dollar shortage technically, in practice, in reality, and what policymakers and market participants do in response, and then what we can expect moving forward based off of the answers to that question. Let's dive in. All right, is there a dollar shortage? If you are new to the channel, you might think that I look a little bit toasty, when in fact, I don't always look this way. I spent a little bit too much time in the sun this weekend, but don't worry, I did it for you, because while I was baking with too little sunblock, too little sunscreen, I was researching this dollar shortage issue for you. So the first thing that we have to do is answer, what is a dollar shortage? Because at first glance, when you see, hey, is there a dollar shortage, or people talk about the problems of the dollar shortage, or the fact that there isn't a dollar shortage, there's a dollar glut, you wonder, okay, well, there's either too many dollars out there or there's not enough dollars out there. Seems pretty straightforward, right? Not so fast. Ever since Bretton Woods, which was the international monetary system that was set up following the devastation of the financial systems and countries following World War II, the entire world has used the dollar to denominate global transactions. This is why when you see other currencies, they're always denominated in dollars. This is why futures contracts are denominated in dollars. This is the source of most of the United States international power, especially when considering sanctions, because the United States can lock countries out of global trade simply by saying you can't use the dollar right now. Everybody uses the dollar, and so that essentially locks you out of being able to do business with most nations, because you can't use the system of trade that everybody else is using. And so for global trade, that's what it means to have your dollar be the reserve currency of the world. It means that everybody uses the dollar for everything. It's basically the money of the world. In addition to being the money that is used for just regular transactions, for futures, it's also the money that is used to service most debt, because most debt globally is denominated in dollars, especially countries who have weak currencies or unstable financial systems themselves. In order to get debt, they have to take out debt in somebody else's currency, because nobody's going to want to borrow Venezuelan money or Argentinian money or Zimbabwe dollars. And of course, the treasury market. The treasury market is massive globally. Central banks and countries and institutions all over the world hold a lot of treasuries, and clearly treasuries are debt denominated in US dollars. So what is a dollar shortage? A dollar shortage would simply be a situation where it's harder now to get my hands on dollars than it was before. And when I say harder, that means that it will show up in the pricing of other things in the market. This is unlike shortages of other things that many of you might have experienced over the last couple of months. If you tried to buy a freezer, or you tried to buy bacon or beef, or if you tried to buy a webcam, or many people are experiencing right now if they're trying to buy a gun. There's lots of things that have shortages right now that, regardless of how much you're willing to pay for it, you can't find it anywhere. It's not a matter of price, it's a matter of actual supply. This is different than the dollar shortage, where when there's a scramble for dollars, it's not a matter of not being able to actually get your hands on them. It's just a matter of how much of something else are you going to have to give up to get your hands on that. The price or the value goes up. So then the big question becomes, does a dollar shortage actually exist then? And we're going to answer this in two parts. Technically, yes, there is a dollar shortage, and we'll explain that. And in reality and in practice, really no. The way that it's being handled, there is really no dollar shortage. And so I know that those are yes and no. We'll dive into both of those right now. So technically, yes, there is a dollar shortage, and here's what that looks like. Take a look at this chart of the dollar, and this is the dollar index, and this is pricing the dollar in terms of a basket of a bunch of other currencies. Because anytime you price something, you're always pricing it in terms of something else. When you're looking at the price of gold, you're pricing it in terms of dollars or your own currency. When you're looking at the price of a movie ticket, it's in dollars or your currency. When you're looking at the price of a currency, you can't price that currency in and of itself. You have to price it using something else, which in the case of the dollar index is other currencies. Now take a look here. Right around the beginning of March is when this dollar started to really skyrocket versus other currencies. There was a giant spike in the price of the dollar versus other currencies. Now a strong dollar is something that you would expect when something has a shortage, right? The price or the value goes up when everybody's scrambling to get their hands on it. They will get rid of more euros or more yen or more whatever it is in order to get their hands on that dollar. This makes sense for the timing of this because this is right around the time when concerns about the coronavirus were starting to really escalate globally and supply chains were starting to shut down, countries were going into lockdown. There was a giant scramble for dollars. Remember, as a country, you can't do business without dollars. You can't service your debt denominated in dollars without dollars. And so you're going to do what you can or do what you have to in order to get your hands on these dollars. And so there's a dollar spike. But as you can see, that spike didn't last too long, and very quickly the Federal Reserve started to roll out programs that were designed to get dollars to foreign markets and foreign players as quickly as possible. The dollar then bounced around for a little bit, and then since then it's resumed its trend downwards. So that leaves one asking the question, why would the Federal Reserve prioritize getting dollars out into foreign markets? Why not just let them sell their currencies and scramble to the dollar on their own? When you need dollars, the easiest way to get your hands on dollars is to sell your treasuries. And so right at the same time, you also saw a steep sell-off in treasuries when that dollar was spiking as market participants all around the world were trying to get their hands on dollars, because the point of a treasury is a stored dollar. You can sell that treasury when you need to get your hands on dollars. And as you remember, if you've been around the channel at all up to this point, the worst thing that can happen to the government and the Federal Reserve is that the treasury market starts experiencing a steep sell-off. They'll do anything they can to prevent bonds from treasuries from dropping because that drives yields up, and the federal government cannot afford a spike in interest rates, or they won't be able to continually roll over the debt that they have, let alone issue new debt, which they're continually having to do right now. So stage one was things are getting bad, so we're buying treasuries because they're safe. But then stage two happens, and stage two is things get really bad, and so I need to sell my treasuries because I need dollars right now. I don't need to just hold on to something safe. I need something that I can actually spend right now, dollars. The only way to get my hands on dollars is to sell treasuries, but if I would have sold those into the open market, that tanks the price. And so the Federal Reserve opened up a new program and said, hey, just give me those treasuries. I'll give you dollars directly. Just trade directly with me and I'll buy them at full price. That way you don't tank the price of the treasuries. We keep yields really low and everybody's happy. You get your dollars. We keep our treasury value tippy top high to keep rates near zero. And this is the most important point about the dollar shortage argument or the dollar shortage theories or people talking about this, is because the Federal Reserve has all the tools they need to and the eagerness to use those tools in order to satisfy any spike in the dollar and any shortage of the dollar that exists anywhere. They have the tools and they will use it. And even if they didn't, there are enough foreign-owned dollar-denominated assets to supply any dollar needs there are around the world. It would just send the dollar up higher compared to other currencies. The total of foreign-owned U.S. assets is just about $39 trillion. That's U.S. assets, dollar-denominated assets, that are owned outside of the United States, owned by foreigners. $39 trillion worth. To put that into perspective, the United States GDP is 20 trillion. So 39 trillion of foreign-owned assets, 20 trillion GDP. So Suffice it to say, foreigners own a lot of US assets. If they need dollars, they can get their hands on dollars. They have more than enough in assets denominated in dollars in order to sell those to get their hands on dollars if they really need to. One more thing just to add context as to how much this $39 trillion of US assets is that foreigners own. The United States collectively owns about $28 trillion worth of foreign assets. So foreigners own $39 trillion worth of United States assets, but the United States collectively only owns about $28 trillion of foreign assets. So there's a huge imbalance there. And so that's, again, just to put into perspective how much foreign ownership of U.S. assets there is compared to both United States ownership of foreign assets or our own whole GDP combined. And so if foreigners need to get their hands on dollars, or literally anybody needs to get their hands on dollars, there are enough assets that are priced in dollars that can be sold that produce those dollars. The problem is what that does to the dollar then and the price of those assets. The price of those assets plummets as there's a fire sale of all those assets to get your hands on those dollars for those expenses. And so that's why the Federal Reserve has met in force. They opened up all those swap lines and all of those facilities and programs immediately, right when this crisis started, within the span of like a week or two. They opened up more emergency lending programs than they created during the entire, I think, year and a half or first 2 years of the financial crisis 12 years ago. And so they were very quick to do this because they didn't want any selling of U.S. assets to happen. They didn't want it to tank, especially treasuries. That's the main concern there. So what's the problem? Market participants could have sold all of the foreign dollar-denominated U.S. assets that they own in order to get their hands on dollars, but the Federal Reserve didn't want this to happen because it would push the price of treasuries down, which pushes the yield up. Government can't afford the interest on its debt, so the Federal Reserve says, no, we'll just print $3 trillion to solve this issue, send all that money overseas to deal with that shortage, don't let the dollar spike, let the dollar resume its fall. So what is the problem then? Well, the real problem, as you can see, is not the dollar shortage, because the Federal Reserve will do what it needs to do and has the power to do it to resolve a shortage and resolve a spike in the price of the dollar. They're not going to let that happen, and they didn't let it happen. The real problem comes after that. What happens once that shortage is resolved? What happens once all of the market participants, they got the dollars they needed? They didn't have to sell their assets to get their hands on those dollars. Well, now, around the world, you actually have an excess of dollars in circulation. You have an excess of dollars that are ready to be deployed. Imagine there's a burning building and the firefighters come and they put out the burning building, and after the fire goes out, there's just a giant puddle of dirty water left. What are they going to do with all that dirty water that's sitting there? You can't just shove that back into the fire hose. Water only comes out of the fire hose. It doesn't go back in. Well, there's no longer the need in order to free up dollars to transact with because they got those dollars. So now they're left transacting. And since all of this was done as an emergency response to global shutdowns, but that's starting to come off now, fire sales of assets, but now those assets weren't sold, and so the prices weren't depressed. Now globally, you start to have an attitude change where you're like, hey, the things that we were doing that were causing us to sell these assets to produce dollars, those conditions are getting freed up and those conditions are getting better or changing. So now what are we going to do with all these dollars? Well, now we have to deploy them. And like I said, just like the fire example, you can't put that water back in the fire hose. And so a lot of these players, they can't just go back out and buy treasuries now. Treasury yields were kept at zero. The Federal Reserve bought those treasuries off their hand. And so if all of these trillions of dollars around the world now start to try and deploy those dollars into treasuries again, that slams the price of treasuries up higher, which pushes the yield down, and it gets to that negative threshold, that zero threshold, and market participants aren't going to go put their money into something with a negative yield by and large around the world when they have a choice not to. And so you're not going to see all this money go into treasuries. So where's the next place that it's going to go? How about the stock market? Have we seen any irrational rise in the stock market lately due to a massive amount of money pumping into the stock market, buying stocks up at levels that are a little bit irrational in terms of any value metrics you want to place on it? Have we seen an irrational amount of money being pumped into the stock market right now, bidding up prices? I don't know. You can be the judge of that. Well, after stocks, you're also seeing it rush into things like gold and real estate, because as the inflationary concerns start to take off, especially globally, all of the dollars that are owned by foreigners, they're going to start to want to purchase things that are hard, real assets, something that has actual physical, tangible value. So you're going to see gold and real estate really start to skyrocket here. And lastly, the most damaging will be once all of these extra dollars around the world start to rush into actual physical products, physical goods, inventory that is stored in US warehouses. We're going to start to see a dump of capital into the United States, and a flood of actual real products, real goods start to be shipped overseas as the dollars around the world don't have anywhere else to go but back home. And that is the mark of hyperinflation. That is the process. That is the crack up boom, if you will. And it is a pattern that we've witnessed over hundreds of countries, over thousands of years, across cultures, across political systems, across monetary systems. It's a pattern that repeats itself over and over and over again. Monetary debasement in order to pay for political agendas, then further monetary debasement in order to be able to have more purchasing power to bid up asset prices in order to keep the facade going. Ultimately, the real wealth that's left over in the system gets deployed into purchasing real assets, which spikes the price of those assets higher, resulting in a crack-up boom in assets, and then all the wealth finally being deployed into just buying anything possible so that you're not sitting with a currency that's losing its purchasing power day after day after day. So is there a dollar shortage? Yes. That's the nature of having a reserve currency. There's going to be a demand for that currency. But when demand is met with an increase in supply in order to fulfill all that demand, pretty soon you're left with an oversupply, which results in an actual drop or crash in the value. Thank you so much for watching. If you have any thoughts or questions, please let me know in the comment section below. You guys are the best. Hit that like and subscribe button if you haven't already. Have a great day.